in fact, also welcome on board Mahesh Babu Subramanian, who's Managing Director at Electra Green Tech, joining us. And this is, of course, with regard to the subsidy announced by the government yesterday, post the cabinet meet, with regard to Delhi and that switch towards EV. Mahesh, appreciate you coming in and speaking to us. Give us a sense, first off, how large is this relatively, in your opinion? And is this just the start point? Could this open the window to more states coming in and doing the same thing?
I think it's a very good scheme. I would welcome the scheme and thank the Government of India and the Cabinet for the approval. I think you'll have to see with the context of what government is trying to do. There was a FAME 2 scheme, then followed by now PM E-Drive, then followed by PM E-Seva. And you look at it clearly, and then followed by a Delhi EV policy. So there is a plenty of actions taken to look at electrification of Delhi as well as other cities. I think it will have an impact. Up to 1.9 lakh vehicles are getting impacted or getting incentivized, likely to be get incentivized in 2 years. Always in all the schemes till now, Government of India and the states have announced this for buying new vehicle. I think this is one of the first scheme which is in a large scale to replace more or less the earlier vehicles which are BS4 and the earlier, which are polluting, let's say, 15 to 19 times when compared to BS6 vehicles. So that will really reduce the pollution in Delhi and also help in reducing emissions. I think industry will get a boost because these old vehicles will get replaced either with EV or the latest emission vehicle. I wish most of them are EV because EV gives really a TCO better enough to be in the commercial vehicle, both at bus as well as trucks. So it's a very good scheme. 5,000 crore given by central government, 1,600 crore of tax incentives and other cash vouchers and others. So it's kind of spread very nicely in terms of distribution of allotment of funding. So I would say this should really help on a new policy where there is a policy for replacing old vehicles and then incentivizing to adapt to new technologies like EV and other new emission vehicles.
And again, Mahesh, give us a sense. It's a large opportunity for you, of course. So 1.9 lakh vehicles, but outside of that, my understanding is around 16,000 buses is what you will opens up in terms of market size for you. How much of that are you looking to win? You're a large player in this space countrywide. And in terms of infrastructure, is there enough which is being done? Because that is one of the headwinds as well.
No, actually, I agree with you. The scheme has just been launched 24 hours back. We'll have to look at the how this is getting manifested or institutionalized into the various schemes. But the intent is right now in a very positive step. I'm sure this will be growing down the line. As we are working on infrastructure, we need to set up infrastructure for all these buses. I think Delhi government policy also support charging infrastructure. There is a PM E-Drive charging infrastructure scheme announced by central government. So everything is positive to do the adoption. And next 2 years, I think most of the vehicles will get converted. If not, I expect after 2 years, there will be a mandate for replacing these vehicles. And hence the industry will continue to replace vehicles to electric, both in the national capital region, which will be followed by many major cities.
Mahesh, you didn't answer the question. 16,000 buses. Out of that, how much will you target?
For us, I think we would target about 20 to 30%. I think we have all the players in the market. We have enough order. Even if you do about 20 to 30%, I think we'll be fine with that.
This is incremental, right, Mahesh? This is over and above everything that you currently intend to do. So you intend to do 2,500 buses FY27. You intend to do 5,000 buses FY28. This actually adds to that.
So we have a large plant. We can scale up quickly. We can expand in a 6 months notice to a higher volume. I think if market can absorb, definitely we will definitely invest. As I told, we are already investing on a new bus and a truck platform to the tune of 400 crore and expansion of the facility by about 200 crore. All of them are for expanding the volume, and we look at every opportunity to capitalize and also help the country to move towards a greener and sustainable mobility.
And Mahesh, therefore, so if you're targeting 20 to 30%, that's another 5,000 buses added to the kitty, right? What's the likely delivery schedule on that that the government will expect? I'm not asking you for your delivery schedule, but what will the government likely expect in your opinion?
This is about 2-year scheme. I think within this 2 years, the scheme will be over and new scheme will come. So we'll have to look at delivering this in the next 2 years. So every industry will look at delivering this in the next 2 years. The scheme has to get operationalized. We will look at what is consumers want, how much of this will get EV, because this 16,000 is for EV and the BS6 buses as well, and CNG as well. So we'll have to look at how much will be for EV, and within the EV, how much percentage if comes to us. And that's what we will look at, about 30% at least market share in the EV sale in Delhi. In terms of what's coming. So we'll get clarity maybe in a month or so, Harsh.
It's a huge opportunity, Mahesh. You currently sit on a 10,000 bus book. You'll do 7,500 buses in the next 2 years. That was your commitment the last time we spoke earlier this week itself. You're doing another 5,000 in the next 2 years. If at all this does come through, translate and does so healthily, yeah, even from an infra standpoint, because that's your key bottleneck. Is that the right way to sum it up? 12,500 buses now instead of 7,500 over the next 2 years?
Yeah, I think it is a good opportunity. We are looking positively on this announcement. We will have a plan to address the market as well. And it's a very positive step. And why not? Why not we should deliver on these terms?
And no worries at all from a capacity perspective, right, Mahesh? If I've understood this right, you have 5,000 bus capacity at this point, but you can ramp it up to 10. Am I understanding this right?
Correct. We can do that in a quick way.
Excellent. So capacity is not going to be a constraint for you.
Yes, please.
Thank you so much. You've been very clear. Thank you so much for coming in and speaking to us.
Thank you.
All right, we'll slip in a very short break, come back, address some of the other buzzers in trade over the last week or so. We'll have the management of Rubicon Research come in and speak to us. Stay with us. Corporate conversations continue here on ET Now.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
केसरिया से मन जोगी हुआ रे दिल झूमे देखो
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Every business is like a piece of land. From the outside, it looks ordinary. The real truth lies beneath. Dig once, you uncover losses. Dig again, unexpected profit shines back. Sometimes it's the heavy chains of debt. Other times, the break of fresh cash flow. But deep below, traps wait. And if you keep digging, you strike the jackpot. The real metrics, the real value. This is all about your company, where we dig deeper so you invest smarter.
Deep Dive, the story behind the numbers. Markets move fast, too fast. One small change, one quiet signal, and everything shifts. Deep Dive doesn't just keep up, it gets ahead. We track the signals before they become headlines. Deep Dive, the story behind the numbers.
Some brands entertain us, some provoke us, some transform the way the world moves. We track the minds shaping these movements. From brands redefining markets to startups rewriting the rules, we uncover the stories and trends fueling the brand economy. Campaigns that go viral, products that change the game, ideas that spark culture. This is Brandverse, your window into the world that builds the brands.
As India marches towards a $7 trillion economy, one state continues to lead from the front. Powering over 8% of the nation's GDP, the journey arrives at India's most dynamic growth hub. ETNow.in Business Conclave and Awards 2026 Gujarat edition. And here we celebrate the visionaries, the disruptors, the builders of tomorrow. Witness the next chapter of India's growth story.
The headline is only the start. The real story unfolds in the details. When noise takes over, precision matters most. We bring the facts into focus, so every big story makes sense. Context, credibility, clarity. Only.
Welcome back. And, big news coming through. The government is likely to propose tax exemptions for foreign portfolio investors holding Indian government securities, according to sources. Proposed changes may include removal of long-term capital gains tax on GSECs and scrapping withholding tax on interest earned from government bonds. This is big, viewers, if this were to come through. Prakash here with what we could expect.
Well, that's an important development coming in, as we are learning from our sources that the government is likely to exempt taxes on government securities held by foreign portfolio investors, wherein necessary amendments will be made to the Income Tax Act. The issue was discussed in the cabinet meeting held yesterday, which was chaired by the Prime Minister, and there was wider consensus to bring an ordinance to make necessary amendments to the Income Tax Act. Sources suggest that LTC tax on government securities and withholding tax on interest earned from government bonds likely to be removed in order to support, a rupee and, of course, encourage foreign investors to come in the Indian stock market. So that's an important development coming in. At this point in time, sources also suggest that necessary amendments likely to be introduced to an ordinance which will be issued soon after the president has sent. In fact, this proposal is there. In fact, the government has been discussing this proposal for quite some time. Various factors have been taken into account, and it has been decided to provide some sort of relief to FPIs in terms of taxes, and therefore the government is moving ahead with, and sources suggest that an ordinance will be issued soon to make necessary amendments to the IT Act, and these provisions will be implemented immediately. And then during the next Parliament session, it will be introduced through a bill which will be approved by the Parliament. So that's an important development coming in at this point in time, wherein government is likely to make necessary changes to the Income Tax Act to provide some sort of relief to foreign portfolio investors for their investment in government securities. Back to you.
Okay, thank you so much for that, Prakash. And of course, we'll continue to track those developments. Prakash will do that for us, and we'll give you the latest as and when that comes through. But this is for the moment an ET Now exclusive. Let me also bring on board Parag Sancheti and continue corporate conversations. He's CEO at Rubicon Research, joining us this morning. Parag, great having you. When I'm looking at your Q4 numbers, they're an outstanding set of numbers. Your FY26 numbers also are very, very strong. Rupee tailwind is obviously aiding the numbers. Parag, you've got 90+%, 95% plus of your sales coming in from the US. Talk to us about how much of these numbers was rupee tailwind and how much of it is volume, new product, and the like. Just give us a sense of that first.
So thanks, Harsh, for having me on the show. Rupee has been a factor, but I think the important thing is the business has grown. The revenue, as I mentioned in my last quarter, also revenue has seen a strong traction, and which continues to have a very strong traction going ahead also. So if you look at from a dollar to dollar basis, also we have grown 35%. And if you look only in rupee to rupee, it is more than 40%. If you look at the EBITDA year on year, we are up 67%, PAT 111%. So across board, as you know, the business has done well, and we continue to see strong traction for our products in the US market.
You did 12 product launches in FY26. You're expected to do far more in FY27. Talk to us about the product pipeline. Talk to us about how quickly it ramps up once the approvals start to come through for you.
Yeah, so Harsh, the product, we have a very healthy product pipeline. Yearly, we disclose the pipeline once. We put out that we have 24 products which are under various stages of approval with the FDA. So there is a strong pipeline which is there. In terms of the market share, we are very, very careful about how we take market share. It's not that we get an approval and we are looking to get market share. We are very careful because our focus is always profitability plus first, and then looking at market share. So whenever we pick a product, we ensure that we steadily grow the market depending on the market situation, ensuring that we remain profitable. And also, if you just see the commercialization rate we have, 92%, it's the highest in the industry, which means out of the 10 products we get approved, 100 products we get approved, 92 of them we are launching. Some of them could be just timing mismatch, but that's a very, very high rate of return on the R&D.
And Parag, give us some color again with regard to growth. You've probably done 25 to 30% X Forex last year for the full year FY26, right? Talk to us about old products versus new. And the new launches, do they ramp up, say, in FY27? Do the new launches of FY26 actually ramp up in FY27? What's the trend we can expect?
So if you see in the current growth, we have seen equal contribution of both established products or products which have been in the historical portfolio and even new launches. And we continue to see strong demand for our established products also. So the same ratio would continue going ahead. We've seen higher demand across our portfolio. So not only the products which got launched this year would ramp up in the next year, but even the products which have been approved 3 years back are also continue to ramp up. As I said, our approach towards market share is very, very systematic. So we do not go for crazy market share as soon as we get an approval. So continuing that approach, we would say the contribution of new launches during the previous and the earlier launches are going to be contributing equally across the revenue growth.
Gross margins, though, Parag, again, X Forex have come off. And based on your commentary, you seem to be suggesting that that's partly because you're relying on outsourcing as well, given the ramp up is still, especially in Pithampur, is only expected to happen in calendar year 27. Give us a sense, is gross margins the right way to look at this, or is the outsourcing piece giving you a higher ROC, ROE? Is that the better way to look at this? Contextualize this for us, please.
Yeah, so I'll just give you, Harsh, the philosophy how we operate, right? So I think for us, sales is very, very important. Sales loss cannot happen. So we ensure that if we have very high demand, and which I mentioned in last quarter and this quarter, we are experiencing extremely high demand for our products. What we would do is we will service those customers through outsourced manufacturing so that we don't lose sales. Now, philosophically, as a company, we are, Harsh, very clear that we will be always lagging in capex. In the sense, we will first create the demand and build our own facilities or capex once we have seen sustainable demand. And that's the reason we acquired Pithampur from Alchem last year. When we had seen sustained demand, we thought, this facility could be a good value addition for us. So if you look at, that at least in the next few quarters, you will see that the gross margin might be a little bit, there will be some misses in that. But as Pithampur comes online, we definitely feel that we'll be back to the same GM trajectory. But having said that, the important thing is we are still maintaining the EBITDA guidance at 22 to 23%. So no matter what our gross margins are here, our EBITDA margins still remain in the 22 to 23%, and we are pretty confident about that.
And how do you do that, Parag? So gross margins, how much do they come off by in coming quarters before the Pithampur ramp up? After the Pithampur ramp up, how much tailwind do you get? And what happens to EBITDA margins? Give us that picture.
So I wouldn't want to specifically comment on it, because I think as we ramp up, Pithampur is still, we've done all the activities and now we are waiting for the FDA inspection to happen. So I don't think I want to specifically put a number, but definitely the gross margins will improve from there. But having said that, from an EBITDA perspective, so the way we are, we do our working, or we focus, I think we ensure that there is enough so that we are able to continue to keep the EBITDA margin at 22 to 23%.
Okay, so you'll calibrate it to ensure that EBITDA margin, at an EBITDA margin level, you keep it 22 to 23
we'll
regardless.
do all the steps which are required to ensure that it remains at 22 to 23%.
Understood. The other big piece, Parag, is the spend on R&D, which is roughly 10 to 11% currently. As you ramp up, and the growth is extremely strong, right? I mean, 43% Q4, 35% FY26 on this higher base. Do you keep or you maintain that kind of R&D spend?
Yeah, so just to give you history, Harsh, Rubicon has originated of R&D, right? Rubicon is a science-first company. Unlike other peers, who have got into domestic formulations and then came to US or regulated markets, or people who have gone from API to formulations, Rubicon's origination remains in R&D and being a science-first company. And if you've seen the return, and R&D is what I would say is as I said, capex we are lagging, but R&D is a lead indicator of our revenues in the future. The kind of work we do on R&D, portfolio selection, and then executing it is, I think, the main growth engine of the company. So we definitely expect the number to be around 10 to 11% of revenue. And we have enough R&D opportunities, or we are very, very excited about our portfolio opportunities which are available, where we are currently spending to build a global pharmaceutical company coming out with innovative products, meeting or solving for unmet patient needs. So I think the number is you should not look at the absolute number, but the opportunities we have, which are fairly significant for the R&D spend we are doing.
I'm going to couple a question here for you, Parag. So two-part. One is with regard to growth, maybe over the next 3 years. What's the kind of growth guidance that you can give us? And second is with regard to your efficiency on working capital. Do your working capital days come off? And if so, do they come off substantially? How much?
Yeah, so Harsh, I'll answer the second question first.
Sure.
The working capital, if you see, there's been improvement from the last year to this year. And I think we have kind of optimized it considering the level which you need in the United States, from sourcing of the raw materials, keeping launch product ready, and then launching the market. So I think from the working capital standpoint, I think we want to guide at where we stand today. We don't want to change anything on that side. Coming to, I think, the revenue guidance, I think you should, and this is there in our investor deck, we talk about the concept of R&D productivity, or, the R&D spend. The lagging R&D spend is an indicator of our future revenues. And if you've seen, that indicator has gone up from around 3x to this current quarter, it has been 5.9x. So just to give you a sense, if you have spent 10 rupees on R&D and then you fast forward it to, because R&D takes time for products to get approved, you take a 20 to 24 months factor, and you see when the first revenues get generated, you see that 1 rupee spend is leading to 5.9 rupees of revenue. So that's the trajectory, or that's the focus as any investor on Rubicon should have, is the kind of R&D we're doing, and we've demonstrated it over multiple years, the quality of our R&D, the quality of our execution. So that is, I think, the way to look at companies' growth. So if we, just to give you a sense, we are doing 500 crores worth of R&D in the next couple of years, which is the number if you add up 10 to 11%. And that's the kind of multiplier, I talked about R&D multiplier, can give you a good sense of where we are moving in terms of our revenue growth.
That's just on new product, right, Parag? Sorry, yes. The multiplier will just be on the new product. The existing products will also grow.
Yeah.
Got it.
So, yeah.
Got it. Point taken. No, very clear. Thank you so much for coming in and detailing that, viewers. So therefore, 2 years ago, whatever R&D was done at 10, 11% of top line, on the new products that come on stream currently, you'll see...
What's the incremental range?
Yeah, correct. Perfect. Thank you so much, Parag. Thank you for coming in and explaining that. Very interesting way to look at revenues, maybe over the next 2 to 3 years on Rubicon. But completely timed out on this edition of First Trades. Thanks so much, viewers, for joining in. It's a goodbye from myself, Sajid, everyone who puts this show together. Thanks so much for watching.
Hello and a warm welcome. You've joined us on Midcap Masala right here on ET Now. I'm Ashesha Advaryu, and it is turning out to be a flat day for Indian equity markets. But several individual stocks continue to remain in focus. We'll put the spotlight on some of those in just a bit. We have several interesting conversations lined up on the show. But first up, let's take you through all the top headlines that we are tracking this Thursday morning. Rajesh Exports is locked in lower circuit after SEBI barred the company and its promoter Rajesh Mehta from the securities market. This is due to alleged discrepancies in reported revenues amounting to about 15.2 lakh crore rupees over the last 5 financial years. Atlanta Electricals is surging in trade after receiving a letter of award from Punjab State Transmission Corporation for an order worth about 285 crore. The order is for supply of 23 units of 160 MVA power transformers. Shares of electric bus makers Electra Green Tech and JBM Auto continue to see healthy gains after Union Minister Ashwini Vaishnav in a cabinet briefing yesterday announced the outlay of 5,000 crore for the phasing out of old trucks and buses in the national capital. For JBM Auto, Vahan data also shows record sale of 157 electric buses in the month of May, the highest in the country with a market share of 49% in the month of May. Meanwhile, Jina Sikho Life Care is in focus after the Bhopal hospital received accreditation from the National Accreditation Board for Hospitals and Healthcare Providers. Cupid is a buzz on the back of a block deal. Promoter Aditya Kumar Halvasia is acquired nearly 21 lakh shares via open market purchase, increasing his stake to about 33.3%. The total promoter group holding has now risen to about 46.2%. Meanwhile, the board of Idea Forge Technologies has approved raising up to 500 crore through equity shares, preference shares and convertible debentures or any other eligible securities by way of preferential allotment, QIP or a combination thereof. The stock is locked in upper circuit of 5% in trade today. Meanwhile, let's go across. Sajit Mangat is in conversation with head banking Citi Vis Raghavan from the sidelines of their conference.
Your name is Sajit, right? Sajit Mangat. Hello, welcome to Citi India Conference. With me is Vis Raghavan, who is the head of banking and vice chair at Citi. Vis, thank you very much for joining us on ET Now. To begin with, Vis, let me start off with the global climate. We're in a very, for last 2 years, you had the trade deals which were impacting global flows, and now you have the West Asia crisis. How do you look at the global banking, how it has evolved through these disruptions which have come in?
So good morning, everyone. Thanks, Sajid. Thanks for having me. So I would say the world is, there's a bit of polarization in terms of deal activity. The Americas, it's absolutely booming. So mergers and acquisitions are off the charts. There's a lot of corporate finance activity, and you're seeing incredible deal flow, deal activity, particularly in the US. I would say UK, Europe, you are seeing activity, but it is kind of muted. And then you're seeing pockets, like in India as well. It's been incredibly busy. I mean, we were involved when Diageo sold Royal Challengers Bangalore, and Citi was advising Diageo. And then you saw, Haier selling its Haier India, the 49% stake to Sunil Mittal, and Citi was involved in that transaction. So you are seeing pockets of action, but I would not characterize it as being kind of prolific. For instance, we are involved in the SpaceX IPO. That is
listed on 12th.
That is just literally, and so you're seeing real reference transactions that are coming to the market. M&A is just, especially in the US, is incredibly prolific, but there is a selectivity. So there's a flight to quality. The best of the best transactions will get done, but the market is slightly selective.
Interesting. You spoke about M&A, and you also spoke about selective and flight to quality. What about the valuation part of it? We saw a few years back the valuation bubble which was coming in. Then we had a cool off which happened, and again we are seeing some of the new technology companies coming in. You have SpaceX which is coming in, then Anthropic, maybe OpenAI. All those new technologies and new frontiers companies are now coming into the market. How do you look at it actually?
So if you look at mergers and acquisitions, I almost say valuations are part of the reason why M&A is happening. So when you got companies that are commanding these valuations, it puts a lot of responsibility on the board, on the management teams to show growth. So, with that valuation, I need to post the earnings. I need to show the earnings momentum. And if that momentum is not coming organically, then boards and leadership teams have only one option. If I can't grow organically, I have to go through acquisitions. And that is why what you're seeing is companies that are commanding those valuations really absolutely focused on delivering the growth, and then looking at acquisitions to really turbocharge and bolster their portfolio and really turbocharge their growth. And this could be very often you see large pharma buying in life sciences, you're seeing technology companies buying in tech adjacencies, you're seeing industrial companies buying in tech adjacencies. So a big catalyst behind these acquisitions is, you are effectively having to make sure that you're posting the growth to justify the valuation. So the valuation is spurring as a catalyst and spurring companies to go and deliver on that growth. The valuation also helps because it gives you a currency. So if your equity is fairly valued, then I can use my equity. I can do a stock for stock deal. I can do a reverse Morris trust deal. I can, I'm able to effectively use that valuation as a currency to go acquire. And you've seen quite a few, stock deals happen. The other change you're noticing is when you look at the world, the US market is where a lot of the capital formations are headed. I mean, there is just so much capital formation happening in the US right now. And that's where, especially with AI and technology, you're seeing even within the US an element of a polarization between the tech names and within tech AI names, the semis, the LLMs, so there is even a polarization within the US. But when you look at it globally, you're seeing a lot of overseas companies wanting to now acquire in the US to partake in that US growth.
Is that a trend reversal in a sense? Because earlier you had developed market companies coming into emerging markets and acquiring. Now
you saw Sun Pharma, right?
Sun Pharma acquiring now.
Exactly. So we financed Sun Pharma on the transaction at Citi. And what you are seeing now is that growth in the US market is just incredibly powerful. and you really want to be part of that growth phenomenon.
As a banker, you must have seen how the balance sheet of companies have moved over the last 5 years. Do you think that balance sheet is not much more stronger at this point in time to look at inorganic growth, in the absence of organic growth which is coming in?
So look, I think corporate balance sheets are in great shape. I mean, and they have been so since the financial crisis, and all through COVID, and then post-COVID into now. You've seen corporate balance sheets are in excellent shape, and they are able to weather and transact in very, very large transactions. The other factor, which is a driver, is private capital. When you look at private equity and just private capital generally, there is close to $2.5 trillion or thereabouts of dry powder that is waiting to be deployed. One difference, though, you have a bit more of a yield curve. So the cost of capital, whether it's cost of debt and the overall cost of capital, is a lot more, you've got to be a lot more thoughtful about that cost of capital now, because you're no longer in a benign yield environment. Yields are fairly high, spreads are tight still. You can get, very comfortable, debt finance deals done. But you are seeing private equity, dry powder also play a part in the M&A activity that is happening out there.
Where do you see India in this, actually, from a private equity destination and from a cross-border deals point of view? Do you think Indian companies are now much more open to do that kind of inorganic leap, acquiring companies bigger than their size to scale up and become a multinational companies?
I wouldn't say bigger than their size, but the large Indian corporates can play in any market and dream as big as they want. I mean, their scale, their respect, and their ability to execute is second to none. Private equity in India is mainly India into India. I just hosted a panel at our conference on private equity, and really I think that whole focus now is on seed funding. A lot of questions around where is India in the AI game? Are we too early? Are we too late? And then, are we going to be an end game winner in India? And the question there is going to be very much around, okay, you have the infrastructure layer that is being built out, across LLMs, data centers, hyperscalers, and the like. But then there's a mega application layer that is coming. And I think the sense is India will dominate and be very relevant in that application layer. I know we will feature in the infrastructure layer, but I think India will come into its own in the application layer.
What you're trying to say is that we may be slow to start, but we may catch up at some point in time. But
how it usually happens.
Yes, in India, for sure. But how do you look at the application part of it, where we have, as an IT services hub, able to manage that kind of, the challenge? Because the Indian IT has been almost written off, saying that, you're not an anti-AI, you don't have an AI trade coming in.
I think every sector will have an AI nexus. And that is the application layer that we talk about. And what we've shown is, the whole .com boom, and, the whole e-commerce revolution. And it's going to be the same with the AI revolution. I think, India will kind of get its act together, it will feature, and then it will dominate and prevail. So I think you will see that too. And I think the application layer of AI will be where the nexus at which AI is actually delivered. And there, and you've seen this even in payments.
True.
When you look at India in payments and payment tech, India is a frontier. I mean, it really leads in payments technology and in payments innovation. So I'm very confident that we will see that prevail in the application layer of AI.
And do you see enough Indian companies able to take that opportunity and take it forward?
Absolutely. We've done this before. I think Indian companies will apply AI at scale, and if you look at most of the valley, it's persons of Indian origin, running many of these companies in the valley and doing an incredible job. So I think the IP and the raw intellectual capital this country brings is phenomenal, and I think that will prevail.
Interesting. Give me a perspective. You are a Mumbai boy, now heading banking for Citi. How does Citi look at India?
I think Citi is, one of the original banks in India. I mean, it's, next year we celebrate 125 years in India. So, really it's local, very strong roots. We are one of the most profitable foreign banks in India. And look, our relationships, we bank Indian corporations around the world. We have led in transaction banking and foreign exchange and services. We meet their trade finance needs. We meet their operational needs. We do their swaps. We do their FX, and we dominate in mergers and acquisitions and capital markets, ECM, equity capital markets, debt capital markets. So really, we are part of the fabric of the corporate finance fabric of the Indian market, and we feel local here. So I wouldn't even call us a foreign bank. And the team is incredible. I mean, whether you take our corporate banking teams, our markets teams, our services teams, our investment banking teams, and we've also added to the teams. We've got incredible talent from around the place. And when you look at the strength of our team now, I mean, I am truly proud of what our teams in India look like today.
Have you doubled down after you've sold off your retail business in India?
We've actually even more profitable, and this has really been a thing about just really focusing on excellence and another core, and our profitability in India, as we've been growing and in more than 25% year on year, and I think the growth since then and the profitability since then has been phenomenal.
Basically, you had banking. Give us a sense of the banking trends which we are seeing today in this global market where we have a lot of disruptions coming in, whether it's the West Asia, maybe 2-3 years back you had the Russia-Ukraine, or you had the trade war, trade tariff impact which is there. How's banking able to evolve through all these challenges?
I think banking has evolved, right? I mean, you evolved through if you go look back, there was LTCM in the late 90s. There was the emerging markets kind of Russia crisis. Then you had the dot-com boom and bust. Then you had the financial crisis. Then you had the epic of all crises, which was COVID. And then clearly you had then the Ukraine war, and then you had all the supply chain, logistical disruptions, and you had trade and tariffs. And now you have the Middle East. So I do think, banking aside, I think, humans and, commerce and businesses are resilient. There will always be a way. I think we just need, if it has not been resolved, you just need a bit of time to come to the resolution. I do think that the world today is a lot more multipolar than it has ever been. So we've come from a unipolar world to a multipolar world. The rails are numerous now. So it is not just all roads leading to the US alone or to Europe alone or China alone. You're seeing now post in this new trade environment we live in, every nation is looking at their trade security, their natural resource security, their energy security, their physical security. And what you're seeing is a multipolar world, which has got now multi-channels, which means whereas before it used to be India, US, it is India, Europe, it's India, Vietnam, it is China +1, is it Europe +1? And that really plays spectacularly into Citi's global reach and scale. We are in over 90 countries. We bank corporations through decades. And when you
Welcome back. You're still tuned into Midcap Masala right here on ET Now. And as promised, let's put the spotlight on the luxury cars market then. And to discuss that in greater detail, we are now joined by Sanjay Thakkar, Chairperson and Executive Director at Landmark Cars, who is now joining us here in our Mumbai studios. Mr. Thakkar, morning. Thank you so much for coming all the way to our studios. And you've reported strong numbers for FY26. About 20% top-line growth is what you've reported. And I was just going through your presentation. Your outlook for FY27 is also very positive. What makes you this confident?
So what has happened is that in the last 18 months, we have added a lot of capacity. And that capacity, I'm very proud of our team that we executed to the T. We set up all the outlets in time within the budget, and our operating teams set them running, up and running, well within the stipulated targets that we had. So this is now the year where we will reap the benefits of all the expansion that we have done. And what kind of expansions did we do? We added nearly 22% of the company in 1 year. What had taken us 25 years to build, we added 1/4 of that nearly in 1 year. And the good part is that we added capacities mainly for EVs. We expanded with Mahindra & Mahindra, with BYD, with MG, and nearly 21% of what we do today is EVs. So it's a good place to be sitting now.
Right, and after-sales service is also one of the other factors which aided your top-line growth, and it crossed that 1,000 crore mark in FY26. What is the kind of growth that you're seeing in this market, and as a percentage of total revenue, how much is it now and how much could it increase by? I'm asking this question because it is a more margin-accretive business, right?
Yeah, that's actually 1,000 crores. Now, that's a number that has taken some time to sink in for us also. And it's a 40% gross, nearly 18% EBITDA margin business. And it's been growing for the last 10 years at 14-15% compounding. So that's something that we have got that growth back. We have a very solid base now to build on. And that's something which we believe will continue to deliver year on year.
And since it is more margin accretive as compared to the normal sales that you do, will it aid margins? Because margins have been in that 6 to 7% mark for the last few quarters, but this time around it came in at 5%. What will the growth outlook be for EBITDA margins?
So I think what is important to note, Shesha, is that we reported our highest ever EBITDA, highest ever gross profit for this quarter and the year. And the margins have been inching up as our outlets become more and more mature.
Correct.
So this is something which is a journey. It's a very predictable business that we are in. And it's very easy to track what we will do. And the good part is that more and more people are buying cars. You see the auto growth numbers even right now. And we believe that with the GST cut which has happened in October, a new kind of growth trajectory has come into our life.
Can you quantify that growth trajectory in numbers for us? What kind of profitability? I believe you reported about 38 crores of profit in FY26. What will the EBITDA margin and revenue and profit target be for FY27 and beyond?
It's, I think, difficult to put a number to it out here. But what I can say is that for the newer outlets, we had burnt around 40 crore rupees in front loading of expenses. Now that is something that we don't expect to happen. In fact, the new branches and the new brands will start delivering positively to the profitability. We are already seeing those numbers happening. So clearly much better times are ahead of us.
And two main growth drivers. One is electric vehicles and other is also operational efficiencies that you're working on. What are the kind of efficiencies that you're working on?
So what really happens is that when you start a dealership, your workshops are not really full. That takes a little bit of time to fill up.
Correct.
Now the good part is that those workshops have started to fill up or already full. We have announced that for, say, Mahindra & Mahindra, we have added one more workshop in very short time in Hyderabad region. So once that happens, then as you rightly said, the higher margin business, which is the after sales, that contribution increases in the total mix. So that is something which is happening. At Landmark, we are also sharing our manpower wherever we can, some other resources. So this is something which actually helps the margin growth over a period of time.
And let's also talk about demand then. We talked to a lot of experts on air, and some of them were suggesting slight slowdown in luxury market because of West Asia. I understand that there is no direct impact, but sentimentally, is that hurting demand?
So far, not, fortunately. So we are seeing strong order intakes right now. The concern in our mind not always, in the last 2-3 months has been whether the supplies would kind of be consistent and seamless. For some time, the demand has been strong, and as we speak, the demand even now continues to be strong. So there has been no letdown in demand.
Okay, so no impact so far. And you have already tied up with a couple of makers. We have Mercedes and a couple of other BYD. You spoke about M&M as well. Any other in the offering? Anything that could be added?
Right now, we have our plate full. We have enough and more that we can do. And this is the year where we have to deliver. This is the year where we have to consolidate and get back to our original matrices that we are so used to.
And what about store expansion plans then? You were telling me that you are already present in about 13 cities. Are you looking to expand further?
We are present in 13 states and nearly 30 cities out of that. And we represent 11 brands, 1 in 6 Mercedes-Benz or 1 in 5 BYD sold is by Landmark. So we have growth for the last 27 years has been the way of life for us. And this is something that will continue. We will not get into a very rapid expansion that we did 2 years back for specific reasons.
Right.
But now this a kind of a normal growth, which will be better than the industry, is something that we will continue to do for many years to come.
Clearly good times ahead, but debt is also another factor, and you've paid down your debt substantially over this year largely. What is the debt profile currently, and how much do you aim to get it down further?
So the good part about this business is that it generates cash.
Correct. It is not debt heavy, basically.
No, and for Landmark, we haven't ever taken long-term debt to expand. Everything that, and I was telling you that we started with 1 store in 1998. So everything that we have done so far is by way of internal accruals. So that has led to this place that we are in. So the debt continues to be paid down as the cash generation happens. We had an operating cash flow of nearly 270 crores last year, a cash profit of nearly 100 crores. And that is something that goes into reducing the debt, working capital debt, that is.
Correct. And how many days of inventory are you sitting at?
So the industry normally believes that around 30 days or lower is a healthy thing. For the last entire year or maybe more, we had been kind of holding our inventories much lower than the industry. What we have done consciously in the last week of March is to kind of stock up, which is maybe 4 or 5 days more than what we would have normally done, for the reason that there has been a price hike. The prices of all cars have gone up, or most cars, from April and some even from June. So we will get a one-time benefit of getting that profit in. But inventory days are really pretty much in control for us. We will bring them down once the supply situation is some concern about that is behind us.
Correct. Let's also talk about individual brands. And first, BYD. I believe there were some import concerns and there were some restrictions. Has it completely normalized?
So there has been an issue of homologation. We all know that BYD is the number 1 new energy vehicle company in the world. And in India, the product acceptance is excellent. The homologation of 3 of the models have already happened, and the supplies have started quite well right now, and it's trending well.
And what is the revenue or the commission sharing model that you have for Mercedes? I believe it is different as compared to other players.
Yeah, it's a very interesting and customer-centric business model that has been introduced. It's what, 3.5 years now, maybe 4, where the customer experience at the showroom level is similar, except that there is utmost transparency. There is no price haggling. All India is one price. The dealers do not carry the inventory in their books. The customer directly pays to the factory. He gets a choice of all India stock, which he can choose from. So that has worked really well. It has taken debt off our book, inventory of our book, and the customer experience, as I am saying, is really much, much better.
So win-win for everyone, for dealers, for Mercedes, and for the customers at large. We also discussed about how input costs have risen for OEMs. Have they cut commissions on account of, or is that a direct benefit? Higher sale price means higher commission for
Higher sale price normally means higher commission. So far we haven't seen any thing that has impacted us adversely. Not only the new car sales, but also the spare parts prices. When they go up, we make a little more in what we would have normally made.
Okay, Mr. Thakkar, thank you so much for taking your time out and joining us. And that was a very candid conversation. We spoke on a whole host of issues, and we're looking forward to hosting you once again as the year progresses.
Thanks a lot.
Thank you so much for joining us here in the studio. But let's go across. We have the Chief Executive Officer of Citi in conversation with K. Balasubramaniam as they share their perspective on the global macro environment.
That, I think, is you should give everyone confidence and a lot of comfort. Certainly did for me. Yeah.
You've been traveling quite a bit, Jane, and I know that you were in France earlier this week, and I know that you'd met President Macron.
Yeah.
There is a G7 meeting that is happening later this month, and in fact, Prime Minister Modi mentioned that he's going to be part of that G7 meeting. Unfortunately, we are living in a very volatile world. There is a war happening in Europe. There is a war happening in Middle East. Tariff is still overhang that is yet not gone away. So from your perspective, based on your interaction with President Macron and other leaders, what are the big priorities that they are focused on? What are the few things that G7 is going to cover when they meet later in June?
I had the privilege of spending some time with President Macron. I asked him, what's he hoping to get? Because they have presidency of the G7 summit. And of course, Prime Minister Modi and President Macron are pretty close. I think rightly, he will focus the G7 on global imbalances. Right, there are a lot around the world at the moment, and talking about what are we going to do about it. The Middle East will come up within that. Some of the tariff situations, the dynamics between the US and China will be in there. But it's also that broader group of allies together, which I think will bring some balance to the discussion. It's not just the US-China discussions, but it's much more about what else is going on and what else is everyone doing about it. And we had our investor day recently, and I was telling the president, one of the lines our head of markets had down is, in investing, the only free lunch is diversification. And I said, it's not a free lunch, but it's a very important part of what everyone needs to be driving to. And the recent trade agreement between Europe and India may be a point of pride for India, but it's really important for Europe. And so there's a lot that can be done through diversification. And they'll be talking about how to try and make that real, as well as talking about how they try and get the upside from AI, not just the challenges. So I hope it will be a pretty productive discussion. When the cameras are off, the discussion gets much more candid, but they're all in it a bit together, and I think that's a sentiment President Macron wants to try and drive home. In front of the cameras, I'm sure we'll get a slightly different story, but behind the scenes, when they start talking to each other, things do tend to get done, in my experience.
Excellent. Sticking to your travel again, last month you were actually part of a select set of United States CEOs who went to China, along with President Trump. And this is potentially what, in the last 8 or 9 years, the first time that, a US president has gone to China, along with a big group of CEOs going in and talking about what is the relevance and importance of US-China relationship. From your perspective, what are the big takeaways and what are the few things that, world needs to know and India should be aware of?
Yeah, I think, behind the media headlines on it, what we saw was two countries that are wanting to make sure that there's economic stability in the relationship. A recognition that whilst China has had a remarkable rise and has huge leadership in multiple different industries and is truly an extraordinary global force, that it is actually important that there is stability there in the relationships. They don't need to be utterly fabulous, but they can't be bad. And so there was a lot of work that was being put into that theme of stabilization, making sure that there are good engagement between both on the trade side, but also from the both sides on the economic front. And the other piece I was pleased to see was the small group of us that were there as part of the US delegation. We were very much part of the dialogue. We were in many of the sessions, and there was a recognition that it was fine for American firms to be doing business in China, and there was the support from the administration, which I think is a recognition of the economic interdependence. And that's important for the world, and it goes both ways. There was no shying away from some of the differences, but they weren't ones that were a source of economic tension, as opposed to more of how do we live with them and keep going.
We all know about your love for India.
Yes.
If I recollect right, I think you first came to India 30 years back in 96 or 97.
Yeah, 30 years, but I was 6 at the time. Yeah.
and I think that was that's probably the longest trip that you did in India.
3
right?
weeks. Yes.
Right.
Yeah. Yes.
And Jane was talking to me about a particular Jain temple in Ranakpur.
Yes.
Frankly, I have not been to that temple, but that's to do for me for calendar 2026.
Yes. Anyone who hasn't been to the Jain temple in Ranakpur, you're missing one of the great. It's the most beautiful building in the world by far. It's amazing. Right. And it's fun because there's monkeys running around. You're in the middle. You're in the middle of real India rather than a big city, or and there aren't many tourists, or there weren't then.
No. So 96 India and what the India we have today is a big difference, because 91 is when India went in for the big liberalization and things started to accelerate and change in a very material way. Now, more recently, ever since pandemic and you becoming the CEO, you're always in India every single year.
Yeah.
And often you try to be here even more often, right? So you've seen India change, grow over a period of time. Your thoughts in terms of what are the things that India has done right?
Yeah.
And what are the things that you think we should be focused on as a country?
Yeah.